Okay, recording this video on Friday, the 28th of January 2022. It's just gone 3:33 p.m. Chicago time. The markets have just shut, and what a week that was. Do hope you traded it well. Huge ranges, huge volumes, such a fast market this week. And this all set up from last Wednesday's video on the 19th of January, where I said we were dropping through supports on the intermediate and low time frames and to get ready for fireworks on the downside. Now, today we had a big bounce. Going to talk about the bounce, why it happened, how you could have seen it was setting up for that. Going to talk about some day trading patterns that were just killer today. And then where does this go from now? A little bit of kind of bigger picture view of the indices again, plus Bitcoin and Ethereum. But let's just remind ourselves why this set up for a move to the downside this week. This is the 15-minute chart. This is the usual better indicators on the two-screen setup where I have everything on the left-hand side to do with volume, which is better momentum and better pro-am, and on the right-hand side, everything to do with price, which is based on better sine wave, calculating the cyclical activity and trendy activity in the market. And this is where everything kind of fell apart. On the 19th, video came out, said really important, watch this level, we're breaking supports, and we were breaking at a high and an intermediate on the 15-minute chart. We were already in a downtrend, and this thing just collapsed from Sunday into Monday. So today, why did we bounce? Well, we ran out of energy on the downside, and on the 15-minute chart, you can see we did a beautiful little pattern here. It's pullback to end of trend on the lowest time frame, pullback to end of trend on the intermediate time frame, and that says we're going to bottom here and we're going to bounce into resistance on the highest time frame. It's a classic. It's when we're rippling through the time frames, these patterns ripple through the time frames. Now, this particular case, those end of trends did not work out. We didn't go into any strength. The bars stayed white. We're still in a downtrend. They didn't catch. And actually big things happen at triples. So we have triple supports on the low, intermediate, and time frame all come together. When they get broken, bang, big move on the downside. But this time around, we've had kind of more cyclical activity. We bottomed. We had some strength with the last kind of 2 days activity here, where we had red bars kind of going on. And then with today's activity, we had a little bit of a poke through that support, and we bounced from there, and we'll probably turn into a little bit of an uptrend here until we find resistance on this next highest time frame. So we still got to put in pullback to end of trend on the highest time frame on this 15-minute chart. Also on the downside, what this kind of set off was there was the exhaustion sell on the 19th, getting the move going. I don't think we've seen exhaustion on the downside. Yep, we saw some blue professional bars getting short into the move here and maybe picking it up on that little spike down and spike down here. But we haven't picked it up on with an exhaustion sell on the downside. So I think there's going to be a lot of people tricked into thinking that 4,200 was the low. We're now kind of going to make new highs and so on, and I don't think that's the case. What we should do on this 15-minute chart on the sine wave patterns is go into resistance here. Might be a little bit of a trendy move. It's going to be somewhere, should be somewhere between where we are, 4,400, and 45.50-ish, kind of somewhere between there. We're going to run into trouble, I'd have thought. I don't think, well, I mean, we could go above this level and form that pattern on the way down, but what we should be doing is, if this is a strong trend down, we should find resistance, whatever point, maybe around the 4,500 or a little above it, where we form that resistance on the highest time frame. When these two come together, maybe on the lowest time frame, we'll have a little pullback to end of trend kind of signal go off, and that'll be at the next push down. And on the next push down, as a test, that's when we might see the exhaustion sell on the real capitulation volume. Because at the moment, I think what we're going to do is we're going to sucker people into the bottoms in, and over the weekend, everybody look at their charts and jump in with orders first thing on Monday, and we'll go for a little bit of a rally, but then it'll run out of steam. So that's a potential scenario that we could see on the downside. Back it up to the 4,500 tip bar chart. Again, there's the exhaustion patterns getting the move going. We had a flush pattern down here, and blue professional bars kind of come in that range, 42 to 43. but we haven't seen an exhaustion sell. So we've put in on this time frame, which is factor of 3 above the 15 time frame, pull back to end of trend, and we'll put in that resistance on the intermediate time frame here before kind of testing down. Now, tops and bottoms are made differently. Tops tend to be made a lot more slowly, and so we tend to see more pull back to end of trend and kind of exhaustion moves gradually play out. Moves on the downside can be very spiky and all of a sudden just hit a V reversal and kind of go the other way, so that we don't have pretty little pullback to end of trend patterns kind of play out on the downside. Is a complication. If we and what we've seen in the last couple of years is every time we've had a kind of severe sell-off, they've been spiked down kind of V reversal type trades. You have to be very quick to take your position because it just reverses back into an uptrend, and the kind of buying opportunity is kind of over very quickly. But one of the things you do see in markets is, as soon as everybody starts playing one particular pattern, the pattern changes. The inverse pattern, if you like, or the kind of the mirror pattern of a V reversal pattern would be a slow kind of correction trending down, where the bottom is made subsequent to lots of pushes down and pushes down. So instead of a V reversal type activity, it becomes push down, push down, push down, and it kind of exhausts the market on the downside and finally reverses to the upside. And because we have these kind of mirroring patterns happen, once everybody gets used to one particular pattern, the market will flip to another. Possibly on this move down, we could see a whole series of pullback to end of trend corrections until it's all over on the downside. Wait and see. 135-minute chart. Yep, we're coming into support on this highest time frame here, but we've got to put in that pullback to end of trend. And that's what we're doing. And again, there's the exhaustion pattern here. We've just put in a bullish divergence here. We've not seen one of these exhaustion patterns on the downside. And again, if we're looking at kind of measured move type things, if we see all of this professional activity has been a midway point, the upside was 4,800, the midpoint is 4,400, so another 400 points on the downside, which would put us at 4,000. And that's what I was kind of looking at, a week, 10 days ago, as a potential area where, about a 20% correction would put us in that ballpark. So, next week we could see a little bounce into Monday, Tuesday, and then it could continue on the downside, potentially down to 4,000. Who knows? Just scenarios that we're kind of playing with. So here we're looking at the 15-minute chart side by side with the 45-minute chart here. The bar spacing is 1 on this chart and 3 on this one. So let me just show you that. So you got bar spacing 1 and 10, and here we got 3 and 4, and that allows us to put these things up kind of side by side. We knew that we were overbought because we've got kind of the overbought signals on both time frames. We kind of go into support. Support's first found in the lowest time frame with an oversold level here. Blue professional bars kind of come in. Pro-Am switches around, and we have a beautiful little bouncing ball signal there, comes in at the lows. And on the next time frame up, you can see we're oversold at this level, looking to poke above better Pro-Am at this point here. And we've got a triple signal there on the 15-minute chart. Just I got a question from a potential subscriber talking about why I'm using minute charts when I go on and on about tip bar charts being so good. It's actually a very good question, and the reason comes down to just practicalities. We don't have at this juncture the CPU processing capability to be able to do tip bar charts with 40, 50, 100,000 kind of ticks per bar. There's a practical limit at which you have to stop using tick charts, and that's why at those kind of practical limit levels you kind of go up to minute charts, just because we don't have the processing power to kind of deal with it. So I find the level is about the 4500 tip bar chart on the E-mini is about the extreme that I can pull up a tip bar chart without it taking too long to kind of download and process. Above that, I start using kind of minute charts to look at activity. So that was kind of a good question. And the other question I'm getting a lot is are these signals kind of going to be released? And we now have the new installer for TradeStation. I'm just testing that. I'll be doing that this weekend, and so we're going to release those on TradeStation very, very shortly, and then NinjaTrader will follow. very, very shortly after that. So you'll be able to get these kind of confirmation type signals on the charts as well. But anyway, so that was the 15 and the 45-minute chart kind of side by side where we had this bouncing ball trade set up today. But with today's activity, we had just a great reversal day, and there were some really important signals that I want to just kind of go through on my day trading charts. The first one is to show you how this whole move kind of set up to the upside. We knew, because of the 15-minute chart with last night's activity, we knew that these signals had gone off with yesterday's close. So we were looking for some kind of bounce with today's activity, and timing that bounce was really important. And this is how it all set off from the beginning. So this is pre-open. This is 7-8 in the morning. There's the opening signal, 8:30 Chicago time. And overnight we had all the blue professional bars kind of coming into the lows. Exhaustion, sell, bullish divergence, flush. We were oversold on the downside. We got a lovely little kind of triple signal there, and we set off to the upside. But I'm always a little bit wary of these signals kind of pre-open because we need, as I always say, the full liquidity of all the players kind of at their desk playing for bottoms and tops to be properly put in. So that didn't work out initially. We kind of tested down into those lows, and we put in a whole bunch of exhaustion, sell, and flush patterns going on there. But not very many blue professional bars kind of going on. We had a couple here, we had a couple here, but not many. But this is the move that really got things going. Let me just show you this. When you see that, where we're testing down and down into that 4,300 level, we keep on coming into it, and then they just decide we've got to buy it. We just got to get this thing going. And that's this whole sequence. When you see a whole sequence of blue professional bars just buying everything in the stack there, they, what is that? It's almost like a 20 point ramp, straight up kind of getting this thing going. Maybe it's closer to 12 or 15 points here. But then they keep going, and then even on that dip there, they buy that. You know, these areas never get seen again, and we just buy there from 43.30. This thing just takes off to the upside. So that's a grab and go pattern here, where they're just grabbing everything in the stack and they're just kind of getting going. So that's the first thing to note. The second thing to note about today's activity is the move is not over until we see exhaustion buy, and we had a classic killing fields kind of trade set up. So we set off. This is the open of the day. That's where the pro bars are holding. This is where this thing just took off to the upside. At this point here, I think it's kind of the grab and go pattern here. We get going to the upside. Note that's the exhaustion buy getting it moving. Then the bearish divergence, the flush, these patterns are playing off that exhaustion buy. This move is not over on the upside on a day trading chart until we see exhaustion buy, bang. So at this high that was being made at the time on that chart, that top was not in because we hadn't seen exhaustion buy up here. That was just a flush pattern. And so we kind of fussed around for a while, and then they did a killing fields kind of trade here at this point here, where they just pushed the market way down. What did we go down? Was that 60 to 30? It was almost 30 points to the downside. Bang. Pushed it all the way down, and everybody's thinking, oh my God, this thing's going to go through 4,300 and close on the lows for the day. No, all they're doing is getting everybody freaked out here, and then we break above the trailing stop at this point here. And you can see it on the 500 tip bar chart as well. Let me try and show you that. Here it is. Look at this thing. That is a killing fields. So there, we couldn't get through those highs, and they just, at this point here, they just drove it down. All those blue professional bars just driving it down. Everybody is freaked out, and we come into this region here. Now, oftentimes with killing fields patterns, you don't see blue professional bars at the low, but all they're doing is they're just absorbing all of the selling that's kind of going on at this point here and just grabbing everything a little bit at a time, because we get no blue professional bars. There's no high average trade size here. They're just sucking it all up. But then as soon as we get through the trailing stop that was set off by that pattern there, that is a killing fields. So we had a couple here and we kind of busted through, bang, and then the move into the close was epic. But that's a killing fields, and it's all because we did not have exhaustion buy up here. The move is not over till exhaustion buy. We run from exhaustion buy to exhaustion buy, exhaustion sell to exhaustion buy. half of the kind of moves get an exhaustion buy pattern kind of setting the move off. You'll often see that, but that's not a guaranteed. But we're setting off from exhaustion sell and run to exhaustion buy because it's got to see those kind of extremes of optimism and pessimism in order to put in, reverse people out of their positions and so on. So remember, the 1500 tip bar chart's the one you should be using for kind of trend to determine the trend. And because we hadn't seen exhaustion buy here, it was unlikely that the move was over. And then when we had this exhaustion sell, that's just setting up all the volume there to reverse and kind of go to the upside. So it was interesting from that perspective. Grab and go to get the market kind of going today. We had a classic kind of killing fields pattern here towards the middle of the afternoon that set us off into the exhaustion pattern that we got here into the end of the day. So that's what's going on the E-mini. Bitcoin. Now, Bitcoin's interesting. Again, side by side, the low and the intermediate kind of time frame. So on the downside on Bitcoin, we've had our exhaustion sell, our overbought situation. We've had blue professional bars kind of getting the move going here, and we've just settled down into this kind of breakout zone. We ran into, on the kind of lower time frame, ran into resistance with overbought at this point here, and we've come into oversold. And we had another triple signal kind of go off. We had these two go off on this time frame. We've settled back in. We've had another go off on the 4500 tip bar chart on Bitcoin. So that I really like for this bottom. I know with Bitcoin I might review the kind of longer term charts because I've been bullish on Bitcoin, and then the Russian news kind of came out and it just got slammed back down to this kind of low 30s kind of level, and we had to make those bottoms all over again. But again, we're setting up for some potential rally here with this kind of setup, and I think on Ethereum we've got a very similar pattern. So we had the bottom kind of put in here. Let me just go to the intermediate time frame using the same tip bar settings for Ethereum and Bitcoin here. We had our exhaustion sell, oversold, whole bunch of blue professional bars kind of coming at those lows. Triple signal. We set off. We find our overbought on the lower time frame. Find a little bit of resistance with blue professional bars there, and so we come back down into that zone. We're finding these kind of bouncing ball type signals. We've had some strength here, and we just bust above those blue professional bars, the trailing stop there on Better Pro-Am. So we could have some good news on Ethereum and Bitcoin over the weekend. They tend to trade a little bit over the weekend, get a little bit active, so that'd be kind of good. So potentially we could be looking for a little bit of a bounce in those, but I should review the daily charts at some point because it's not totally convincing on the daily charts that the absolute bottom is in here, just because cycles haven't maxed. But let's see, we could get a little bit of a bounce in these two. There we go, a little bit of recap on what I'm seeing on my charts, and I hope you enjoy your weekend.